Back speaking with Dennison Hambling this morning from Intelligent Monitoring. Dennison, good morning.
Morning, Andrew.
Hey, great to be catching up with you. Last couple of days here, news of another acquisition, Adeva Home Solutions. Just tell us a bit more about this.
Yeah, thanks, Andrew. Yeah, look, this is a very exciting transaction, or really change for the business. So Adeva is a outsourced technical business that ADT, the subsidiary we bought last year, was using heavily. And so we got to know the guys there, Adam and Evan, who founded it, Adeva. And they've run a very successful business that we've got to taste, I guess, over a long period of time. And so we brought them into the fold. But I think the most exciting part of the overall transaction was by bringing them into the fold, we're going to give them a part of an unloved client base that we had inherited through our journey, which sets them up really well on day one. And we're going to reintroduce the name to Australia of Signature Security, which is a very beloved security brand, or at least a very known, I should say, security brand in Australasia that was shut down in about 2017. And so the overall dynamic of the transaction put as whole is actually very material for us. The dollars of the transaction itself not necessarily so apparent to people on day one, but really put our business on its head, and an awful lot of enthusiasm in the business and the industry for what we've just done.
But from day one, you'd see this as a full-service security company with a significant number of customers.
Absolutely. Look, I don't have the exact number, but I'd say on day one, it's probably the 5th biggest security services business in Australia. And so that's an end-to-end service company. You can call them, they will look after your alarms, probably more pitched to the high-end home market, SME sort of market, where you need a technician, you may have various different security systems, platforms or needs. But yeah, they hit the ground running. And as I say, back in the day, Signature had over 100,000 customers, so at its peak. And as you walk around Australia, as I have seen in my travels, you'll still see a lot of Signature security stickers out there. And so for the guys who are now running the business in partnership with us, it's an incredibly strong way to start a business. Being known already on day one is pretty good.
Do you see scope for more consolidation in the Australian security sector?
Yeah, look, I definitely do. I mean, I've said all the way through this journey, there's a couple of fundamental dynamics that are driving that. One was you've had the rebates come off effectively as you've gone from fixed line telephone to wireless. Rebates have come off for the industry, so that's sort of been a bit of a pressure of profitability over the last decade. Two, the industry's aged, and so a lot of the technical base today, the staffing numbers haven't kept up as we're now getting into retirement age for most of the industry. And then technology itself has moved at a pace, and so I think there's opportunities to take customer bases and move them along quickly. They've been a bit unloved, I guess, to think of it that way. So there's over 2,000 independent security companies in Australia, and there's very few with any real scale. And I mean, the fact that we hang ourselves out to call ourselves the largest monitoring services business in Australia sort of tells you what you need to know. So large industry, lots of players, and a lot looking to retire or succession over the coming years.
And tell us a bit about the first quarter of the year, Dennison, a strong start to 2024 for you.
Yeah. Oh, look, and our story is one of progressive improvement. So if you go back to 2020, Peter Keenan and I joined the board, and we started the process of bringing what was a collection of businesses together. We did that, sort of semi-recapped. The big note of our journey has been the acquisition of ADT in August last year, which was really a business improvement exercise. And so it sort of feels like we're on a constant improvement journey, and that's really what we are as we go towards our goal of real leadership. And we're not where we want to be at all times, but we are heading in absolutely the right direction. So this quarter really just reflected further improvement. So you see operating cash flow, very strong, as we've said, in this business. The underlying dynamic of this business is very cash generative. We are going through the back end of the 3G shutdown in Australia, and that is actually causing more capex than we probably first anticipated when we bought ADT. We weren't probably as aware about the pre-commitment to capex that we had walked into. That being said, we obviously got a fabulously priced deal as well, so it doesn't distress us too much, and it does end. So we're really at the back end of that. We've got a little bit of work to do in New Zealand next year. Our ADT subsidiary there still is working through the 3G process for another year, but that quarterly showed, what we've been saying, which is, very good underlying business here, very good cash generation, and it's heading in the right direction. And so, yeah, it was a nice quarter to get through, and we're looking forward to seeing that continue to improve.
And on track for your revenue guidance for the year.
Yep. Look, revenue guidance, yes. We've got a few moving pieces to revenue because we've also sold a subsidiary in the last couple of months, which generated quite a lot of revenue, but not a lot of profit for us. But no, absolutely. I think particularly around revenue and growth, I think we called out December last year, the commercial enterprise part of our business, which really sits in the ADT subsidiary, is very prospective. And we're really bringing that back to life. And that's quite big dollars, big gross margins, big profitability. And so from a fundamental point of view, absolutely on track. And with an engine that we really expect to propel us into 2025 and 2026, which is where my head's sort of really turned and has been turned for some time now.
I suppose, Dennison, just finally, as you say, as a leader in the security space, are you getting that recognition in your market cap?
No, I mean, it's a good question, Andrew. We're very thankful to have the investors we have, firstly, and we've had to ask investors through the journey a couple of times to support us, and they have. So we're very grateful for the support we have. I think the challenge we have is we have built a platform, and I have said, fairly openly to people, I mean, we know that platform has value. It has, it is not lost on us. We have had engagement through our journey with people that have indicated that. Our thinking is really just to put up the marks to the market about where we want to be and try to deliver to that and over deliver, and and hope that we get the recognition for that. I think it's pretty apparent if you look around the world. This is really an 8 to 10 times EBITDA business. We were that, actually, ironically, before we started the ADT journey. Obviously, Ukraine and market and liquidity, lots of things play a factor in a share price, but we really we'd really like to see ourselves back into that zone because. To be really blunt about it, the team and the business and the team around this business see $1 billion business here. And so, again, we have to execute. It's not lost on us. It's a turnaround sort of growth improvement exercise. So it's one that you have to commit to and work hard on. But if you do, there absolutely is a lot of scope for improvement. It's a big industry, as you say, very fragmented with no real leader. I'd like to think an Australian, small cap, micro, small cap, mid cap could actually be the company to fill that role.
Great to speak, Dennison. Thanks for your time.
All right, thank you.